Grab, the comeback stock nobody saw coming. 3-minute script. The market loves to forget. It forgets the companies that fall out of the spotlight. It forgets the names that stop trending. It forgets the stocks that once had hype and then slipped into silence. But sometimes a company uses that silence to rebuild, to refocus, to sharpen its edge. Tonight we're talking about one of those companies. Grab Holdings, ticker Grab, a Southeast Asian giant with a comeback story hiding in plain sight. 1. The background, what Grab actually is. Grab isn't just the Uber of Southeast Asia, that's the lazy version. Grab is ride-hailing, food delivery, digital payments, financial services, logistics, merchant tools, and a growing fintech ecosystem, all inside one app. One ecosystem, one digital backbone for an entire region. In Southeast Asia, Grab isn't a convenience, it's infrastructure. And that's what makes this story interesting. 2. The earnings, quiet strength in a loud market. While the big US tech names dominate headlines, Grab has been quietly doing something the market didn't expect. Improving, stabilizing, and inching toward profitability. Recent earnings showed revenue up, losses narrowing, cost discipline improving, user engagement rising, and fintech adoption accelerating. This isn't the chaotic, cash-burning Grab of its SPAC days. This is a company tightening the screws, cutting waste, and building a path to sustainable growth. The market didn't cheer, but it noticed. And that's how turnarounds begin. 3. The optimistic outlook. Why this matters now. Here's where things get interesting. Southeast Asia is one of the fastest-growing digital economies on the planet. Rising middle class, rapid urbanization, exploding smartphone adoption, underbanked populations moving into digital finance, and a young demographic that lives inside mobile ecosystems. Grab is positioned right at the center of all of it. And the company's roadmap is shifting from grow at all costs, grow efficiently. That's the pivot Wall Street always waits for. Add in improving margins, expanding fintech revenue, stronger unit economics, and a clearer path to profitability. And suddenly, Grab looks less like a fallen SPAC and more like a maturing platform with real staying power. 4. The final word. Grab isn't a hype stock. It's not a meme, it's not a moonshot. It's a company that spent years building the digital infrastructure of Southeast Asia and is finally learning how to turn that scale into profit. The market hasn't fully priced that in, not yet. But in a world obsessed with the next big thing, sometimes the real opportunity is the company that's been here all along, quietly getting stronger, waiting for someone to look again. Grab the comeback stock nobody saw coming.